potentially new landlord, most will have already had a residential mortgage, and so the sorts of information you have to provide when you get a residential mortgage will in some cases also need to be provided for a landlord mortgage. So for example, you'll have to provide proof of address for 3 years, proof of identity. Landlords will generally have to demonstrate they have an income of at least 25,000, although that does vary a bit from lender to lender. And one of the key differences with a mainstream residential mortgage is how affordability is calculated. So with a residential mortgage, of course, it's based on your income. With a buy-to-let mortgage, it's the rental income that's important. And lenders in general will want the rental income to be between 125% and 145% of the mortgage payments. And so that gives you a starting point as to what sort of mortgage you'll be able to get. So if you're thinking of buying a relatively low yielding property, then you're not going to be able to get such a big percentage mortgage as if you were buying a high yielding property. Likewise, if the property is an HMO, that imposes additional requirements. Quite a lot of lenders won't lend on HMOs, although there are an increasing number who will. You're going to have to make sure, of course, the property complies with the various regulations that are coming out with increasing rapidity. But from a mortgage perspective, work on the basis that the maximum loan to value in order to get a reasonable rate is going to be 75 or perhaps 80%, but you're only going to be able to get that sort of LTV if the rental income is good. So minimum deposit of 20 to 25%. On top of that, of course, you're going to need the stamp duty, including the 3% stamp duty surcharge. So you do need a decent amount of cash available as a deposit before you can even think about it. Once you know how much cash you've got available, and once you've talked to a good independent mortgage broker to identify how much you can borrow, then you can start to think about looking at types of property. But there is a bit of a chicken and egg situation here, because before the mortgage broker can tell you how much you can borrow, he or she is going to need to know what the rental income is going to be. So you need to do that research really in conjunction. But if you don't meet the lender's requirements in the first place, then of course it's all a waste of time. So it makes good sense to go and see an independent mortgage broker and identify what the requirements are. Once you know those, you can then start to look at properties, knowing the types of rent you'll need to be able to get in order to get the mortgage you need. In general, as with residential mortgages, the interest rate you pay will be lower the bigger the deposit you put down. So if you can put down a deposit as much as 40%, you will tend to qualify for the lowest rates. But if you can only put down 20%, there is still a decent choice of mortgages available, subject to the fact that you will need to better prove adequate rental income.